Continue watching the Wharton School of Business from UPenn Financial Accounting. I think we can finish it pretty soon.
Hello, I'm Professor Brian Boucher. Welcome back. In this video, we're going to dig out the relic spotter case that we worked on during the first 2 weeks and go through its cash flow transactions to classify them into operating, investing, and financing buckets, which is the first step towards putting together relic spotter's statement of cash flows. Let's get started. Let's start with transaction number 1 for the relic spotter case. In this transaction, Relic Spotter sold shares to investors. In the journal entry, we debited cash for $250,000 because the company received cash, and then credited common stock and APIC. So here on the right-hand side of the screen, we'll keep track of all the cash flows, and I'll have you try to guess whether the cash flow is operating, investing, or financing. So let me put up the pause sign and guess which bucket it would go into.
Almost always financing, right?
The answer here is financing. One of the definitions of a financing activity is cash flows with our owners. So if we're issuing stock, we're getting stock from the owners of the company, which would make it a financing cash flow. Next, transaction number 3.
Excuse me. Where's transaction number 2? Does the cash flow statement only include odd-numbered transactions? Or did you make a mistake, as you often do?
Hey, wait a minute. I haven't made that many mistakes. Well, at least not yet. There's no transaction 2 in this case because there was no cash involved for transaction 2 in the relic spotter case. It was the transaction where Park was borrowing money on our own account and we didn't even record it. If you go back and look at the relic spotter journal entries, the only ones that we have to deal with are the ones that have either debits or credits to cash. So anyway, in transaction number 3, Relic Spotter paid $3,900 cash in legal fees to incorporate the business. Try to classify that as operating, investing, or financing.
Operating.
The answer here is operating cash flow because this is one of the costs or expenses that Relic Spotter needs to incur to run the business.
Could we not call this an investing activity? After all, incorporating the business is a long-term cash flow. At least, we hope.
You raise a really good point because we do hope that this cash flow will have a long-lasting benefit. But if you remember, we decided to expense this cash flow on the income statement. So to provide comparability, we're going to treat it as an operating activity on the cash flow statement. If we had created a long-term asset, then we probably would have treated it as an investing activity. As you'll see, a lot of these are going to be really tricky to classify because there's a lot more art and science into trying to figure out what bucket to put these in. Next, in transaction number 4, Relic Spotter bought land and building with a mortgage and $31,000 of cash. So go ahead and try to classify this cash flow as operating, investing, or financing.
That's investing.
The answer here is obviously $155,000 cash outflow for investing and $124,000 cash inflow for financing.
Whoa now. I see a credit to cash for $31,000. We bought land and building. Why is this not $31,000 of cash flow for investing activities?
Okay, I said obviously when I provided the answer, but this one's far from obvious. The issue here is that we did one journal entry, but there were really 2 separate transactions. First, we borrowed $124,000 cash from a bank under a mortgage. That's a financing activity. The second is that we used that cash plus $31,000 of our own cash to buy $155,000 of land and building. That's an investing activity. To provide our investors and analysts a clear picture of what we're doing, we need to split this into the 2 transactions. We really borrowed $124,000 from the bank under a financing cash flow, and we really paid $155,000 cash for land and building as an investing cash flow, and that's what we need to show on the statement of cash flows. Transaction number 5, Relic Spotter paid $33,000 cash for renovation work to the building. Try to classify that as operating, investing, or financing.
You're welcome, Pongo Puffer.
The answer here is investing. It should be an investing cash outflow of $33,000.
I could make a case for operating here. This seems a lot like routine maintenance to me, which would be an operating activity.
We talked about this briefly when we did the original transaction, but the key question here is, does this expenditure represent a capital improvement or routine maintenance? A capital improvement would be anything that increases the value of the building or its useful life. We would add that to the building account and depreciate it over time, and we consider the cash flow an investing activity. Routine maintenance is something you have to do no matter what. It's already built into the assumptions about the value of the building and its life. It gets expensed immediately, and then it would be considered an operating cash flow. So that's the distinction, and we're going to talk about it more later in the course. Transaction number 6, Relic Spotter paid $120,000 cash to buy metal detectors. Is that transaction operating, investing, or
I think it's
financing?
investing. You can use it multiple times, right?
And the answer is $120,000 investing cash outflow.
I could make a strong case for operating here. Our core business is renting metal detectors. Why would the purchase of said metal detectors not be an operating activity?
You are correct that our business is renting metal detectors. But we're going to rent these metal detectors over and over and over
Operating is
for
like
up to 2
101.
years, which makes them more like
Oh,
equipment, a
really?
long-term asset, and makes the treatment of an investing cash flow more appropriate. If we were buying these metal
Hey, to be
detectors and immediately
fair,
selling them like inventory, then we would call it operating. Or if we bought them and we
if you look at my previous video when I did the quiz, I'll be glad if I get like 50% right. Oh, you went to UPenn, did you?
were going to rent them for less than a year, then we might consider them operating. But the fact that we're going to have them for
Also, it got some great emojis, not gonna lie. They're all really cute for some reason.
more than a year, up to 2 years, makes this feel more like an investing activity. Okay, next we're going to skip transaction 7 because that was a non-cash transaction. Relic Spotter had purchased inventory on account, and move to transaction 8 where Relic Spotter had paid $2,100 cash for a 3-year software site license. Why don't you try to guess whether that's operating, investing, or financing?
This jumping between operating or finance,
The
investing.
answer here is an investing cash outflow of $2,100. And before the virtual students jump in, I'll just tell you, this is like the prior two, where we're investing in a long-term asset. So that's going to
4%. Okay. Thank you. Definitely try to look more appealing. This one? Really? I thought this is a gamer. Oh, the emojis are from 4cent. Oh.
make it an investing activity because we're investing for more than a year. Transaction number 9. Relic Spotter paid $8,000 cash for advertising over the next year. Is that operating, investing, or financing?
That's operating.
The answer here would be operating. The advertising that we're prepaying is not more than a year. So by our general rule of thumb, we would call this an operating activity rather than an investing activity.
You can probably tell from my
These last
VTuber
two actually make
presence.
sense. What am I
Welcome, paying viewers. Man, there's some really cute emojis today.
missing?
You're not missing anything here. This 1-year rule of thumb tends to work pretty well. If you have an expenditure that's going to benefit you for more than a year, we tend to call it investing. If it's going to benefit you for less than a year, we tend to call it operating. And there are not many exceptions to that. So one exception would, well, let's not overcomplicate this now. I'll just say good job, and let's move on. Moving on to transaction number 10. Relic Spotter lent $5,000 cash to Rebecca Park as a loan.
This is financing.
She has a year to repay. Is that operating, investing, or financing?
Financing 100%.
And the answer is a $5,000
Really?
operating cash outflow.
So much for things making sense. I thought transactions with creditors were financing. This is a loan. Why isn't this financing?
Actually, in this case, Relic Spotter is the creditor because Rebecca Park is borrowing money from the company. If the company were borrowing money from Rebecca Park, then yes, it would be a financing activity. So the question now is, if Relic Spotter is lending money to Rebecca Park, is that an operating or an investing activity? I decided to make it an operating activity because the loan was only 1 year. If the loan was longer than a year, say 2 years or 3 years or 5 years, then I probably would have made it an investing activity. But it's not a financing activity because the company's the creditor here. And if the company's the creditor, then it's not a financing activity.
Where did you get this
Next, we
emojis
skip
from?
another couple of
They're
non-cash
fire.
transactions to go to transaction number 13. Here, Relic
Short-term loans are operating. Yeah, I understand it's short-term, but I was thinking it deals with finance rather than like spend it on the business. Because it's a loan to Park. Park is the individual, and we don't know Ooh. Yeah, it's not the same as business almost. It's almost like irrelevant to business, just like giving like a like a side hustle almost. Oh no, Ping Ruler's got some the tail just prices.
Spotter paid $2,000 cash to its supplier. This was for the inventory that it bought out account in transaction 7. So is this $2,000 cash paid to the supplier, operating, investing, or financing?
Pay to supplier operating?
The answer here is a $2,000 operating cash outflow.
Go on. You are making sense again.
Yeah, a payment to a supplier is one of the examples we use to define an operating activity. By the way, do you know where the smartest people in America work? At the U.S. Mint, because all they do all day is make sense.
Uh-huh.
In transaction number 14, Relic Spotter paid $2,500 cash to its shareholders for its dividend. This was the dividend that they declared in transaction 12 that's actually paid in cash in transaction
But this
14.
has to be
So is this
financed.
$2,500 cash paid for dividends, operating, investing, or financing?
The creditor is the owners.
The answer here is financing, a $2,500 financing cash outflow.
Welcome back, Ethereum Daddy. I think I'm done pretty soon. My hands are recovering. Probably this is the last week I do this course. Pretty passion in crypto. Man, would be pretty rich if I did that.
Makes sense. Go on.
Yes, paying dividends is one of the examples we use to define a financing.
Yeah, I cut my hand. Got some stitches removed. Doctor said still recover for a week. That's why I'm watching videos instead of like coding, because I don't want to type.
By the way, do you know where you can also find smart, reasonable people? A perfume factory, because all they do all day is make sense. Next,
still
in
got some
transaction 15,
fire
Relic
dad
Spotter
jokes.
received $1,200 cash from the Penn Antiquities Club for future unlimited rentals. So how do we consider this cash received for future rentals, operating, investing, or financing?
Sounds like investing.
The answer here is operating. It's a operating cash inflow of $1,200, which makes sense because we're receiving cash from customers, which is one of the definitions of an operating cash flow.
Fuck, I thought you were Relic Spotter,
16,
not
Relic Spotter receives cash rental revenue on the
that
metal
lord.
detectors. Total amount of cash is $120,100. Is that operating,
That's
investing, or
operating,
financing?
guarantee.
The answer here again is operating. It's an operating cash inflow of $120,100 because again we're receiving cash from customers.
Either these have gotten easier or we have gotten smarter. These all make sense.
I think it got easier.
You have clearly gotten smarter, probably because I'm such a great teacher. Although I have run out of puns on the word sense, so let's move on. In transaction 17, Relic Spotter paid $38,000 cash for inventory. Is this operating, investing, or financing?
Operating.
The answer here is operating cash outflow of $38,000. Operating because this is a core expenditure for running our business. Transaction 18, Relic Spotter received $35,000 cash from sales of sundries. Is this operating, investing, or financing?
Operating.
The answer here is operating. Again, this is a cash collection from customer, which is one of the things we use to define an operating activity. Finally, transaction 20.
Number 10
Relic
was
Spotter
tricky.
paid $82,000 cash to its employees for salaries and wages. Is this
That's
operating,
so
investing,
operating.
or financing?
That's so operating.
Again, this is operating. It's an operating cash outflow of $82,000. Paying our employees is one of our key business activities, so this would be an operating activity. And that was the last cash transaction for Relic Spotter because the rest of the transactions in the case were adjusting entries, and adjusting entries never involve cash. So we can go ahead and total everything up. We see that the bottom line cash balance here is $78,800, which if you go back and look is what we end up having at the end of the year for Relic Spotter. And we've divided that into a operating cash inflow of $17,400, investing cash outflow of $310,100,
Got
and a
most of
financing
it
cash
from the
inflow
shares.
of $371,500.
So, we're done. Now, all we have to do is just list these cash transactions on the cash flow statement, in operating, investing, and financing order. Correct?
I wish that was the case because then we would be done with the week on cash flow statements. But if you've looked at the website, you can see that we have a lot of videos left to go. And we'll
Seriously,
pick this
I
up
don't,
next video with a
want to
discussion of
spend
the
one more
two
week
different
on
methods
this.
there are for putting together a statement of cash flows. There's an easy
Yeah,
method
no, but
and a difficult method.
I forget a lot of the
Unfortunately, all
previous
companies use
ones.
the difficult method, so it's going to take us a lot of videos to understand that method, which we need to know to understand real companies' financials.
Method.
And we'll pick this up next video with a discussion of the two different methods there are for putting together a statement of cash flows. There's an easy method and a difficult method. Unfortunately, all companies use the difficult method, so it's going to take us a lot of videos to
Some
understand that
advantage,
method,
no?
which we need to know to understand real companies' financial statements. I'll see you next video.
See you
See you
next
next
video.
video.
Bada bing, bada boom.
Hello, I'm Professor Brian Boucher. Welcome back. In this video, we're going to talk about the two different methods that you need to know.
Which should you do next? There's if you're into programming, where was it? Something happened. What happened? Pongo Parfa, thanks for following. Welcome aboard. Study every day, improve every day. 1 hour a day. Keeps the low salary away. Thank you. Welcome. What's the other one? Remember I saved some is it this one? No, there was a $996. I'm not sure. 996 is a very famous thing in China. 9 hours, 9 a.m. to 9 p.m., 6 days a week. The remaining days for you to charge back to do 996 next week. It's really sad. Yeah, this one. I found it. Computer science on Open Source Society University. So they basically compiled a bunch of the open source courses into this one. So that looks pretty good. Yes, I'm Chinese. Even though I probably spend a lot of my adult time in the US compared to China. Oops, nice, you already got one. That's awesome. Well, I don't know what to suggest. Probably, I found one of the other class that I really enjoyed was negotiation from Yale. I really like that one. Negotiation, Yale. Yeah, I think I'm much more used to the US than China now. I think it's this one. I remember the professor's face. This dude greeted everyone with a Chinese video. It's pretty badass. There's a lot of things look like common sense, but actually it makes a lot of sense. You actually enjoy the US quite a lot, as a matter of fact. Stay here for too long, got too used to it too. I don't think I can go back anymore. foreseeable future, probably become citizen. I mean, I could become citizen anytime, but just too lazy to go through the hassle.
To put together a cash flow statement. Let's get started. There are two methods for preparing the statement of cash flows, which are rather creatively titled the direct and indirect methods. In the direct method, you just list the cash receipts.
But yeah, I'm a mechanical engineer, so like STEM people like us, I think it would be a good idea to expose a little bit to stuff in business school or like accounting or other humanities. What's that? I used to get the Harvard philosophy class. Was it philosophy? But there's a Harvard one that was pretty popular back then. Anyway, I think it's good for chatting with people. It makes you sound a little bit more erudite and educated.
And disbursements by the source or use of funds. So where are all the places that the cash
Very
came
good
from?
for impressing
Where are all the places that you paid cash out to?
your potential future spouses.
This method is always used for investing and financing activities, but is rarely used for operating activities. Instead, for operating activities, companies tend to use the indirect method. This can only be used for operating activities, and the goal is to reconcile net income with cash from operations by removing any non-cash items from net income and including any additional cash flows that were not in net income. So we're going to see a statement that starts with net income, ends with cash from operations, and shows all the differences between the two. Almost every company uses this method for their operating activities, and in fact, if you use the direct method, companies also have to provide the indirect method as well. So what this boils down...
Yeah, you gotta keep trying. Oh, appreciate it. Thanks, Pongo. I've been trying. I used to have a extremely heavy accent, but I think one of my really weird method to reduce the amount of accent I had was to learn Spanish and German. And I eventually mixed in accents from those two languages, which makes my English a little bit different from Chinese accents, I guess. But I think it's still, if you can still hear it. ETH that you gotta try, man. You gotta try. It's all about the going out and meeting new people constantly. It took me like how many years? 6 years or 5 years to finally find one. It's pretty good. Life will be good.
Down to is for three buckets: operating, investing, and financing. Operating can be either direct or indirect, whereas investing and financing are always the direct method.
Why does there have to be two methods? What's
Just reminding me of one of the Jimmy O Yang's talk show. I'm very well. How are you?
good for the goose is good for the gander. This is just more stupid overcomplication.
It's
You know,
still
I'm
so
going to agree with you that
savage.
this probably is a stupid overcomplication, because really every company uses the same approach for their cash flow statement. They do.
I think just be yourself. And I think it's actually funny because a lot of in the Asian standards, you don't want to get too buffed, but you do want to be buffed a little bit, but not too buffed. Not enough to see wings, but just below that. And then obviously they will value um, good emotion intelligence. Just don't be cocky and be yourself.
The investing and financing activities using the direct method, and then they use the indirect method for their operating section. Because even if they did the operating activities under the direct method, you still have to provide the indirect method anyway. The direct method's a piece of cake. You just list the cash flows based on where they're coming from or where they're going to. Really, the one thing that you have to learn that's difficult is this indirect method for operating. And we're going to spend much of the rest of the video and much of the rest of the week trying to get a handle on this indirect method for the operating section. let's talk about the indirect method in more detail. The indirect method section will start with net income. Then it's going to adjust for components of net income that are tied to non-cash items or to investing activities. What we need to do...
Pongyo, whack me. Why does this sound a little bit... reminds me of a few words.
Add back the expenses or subtract the revenues to remove them from net income to get to cash flow. So for example, net income includes depreciation expense and amortization expense, which are both non-cash expenses. To remove those non-cash expenses so that we can get from net income to cash from operations, we have to add them back because adding back expenses removes them. We could also have gains or losses on sale of property, plant, and equipment or investments. Now there are cash flows associated with those, but we want to count those cash flows in the investing section. So we need...
Hello, Mirabik. You're looking at Introduction to Financial Accounting from University of Pennsylvania, Wharton, where our dear President Trump graduated from. Eventually you find one. As a matter of fact, I think you guys share a lot of interest with a lot of others as well. So we used to think it's primarily males that look at video game streamings and streaming in general, but actually it's quite a good mix. What is the use of financial accounting? Actually, I was trying to, there are some financial statements from companies, and recently there are some pretty bad ones that make Netflix go like, boom. Oh. It went from 650 to 177. So I want to see, basically trying to catch and understand evaluation, understand how healthy a business is doing. Oh, really? But business majors are pretty hardcore sometimes. It's pretty hard to get in as an undergrad, at least. But yeah, trying to read the financial statements from stocks, because recently there are a lot of market emotions, a lot of massive stock drops. So I want to make sure I can understand those.
We need to remove these gains and losses from the income statement. So we're going to add back losses or subtract gains to remove them from net income on our way to cash from operations. Then we need to adjust for components of net income tied to assets or liabilities created through operating activities. These are the working capital accounts, like accounts receivable.
Start with net income, adjust for components of net income tied to non-cash items or to investing activities. Add back expenses, depreciations, gains and losses of PP&E. Forgot what that is. Property, plant, and equipment. Adjust for components of net income tied to assets or liabilities created through operating activities. And or subtract change in assets liability account balance. Use the balance sheet equation to determine whether to add or subtract.
Receivable, inventory, all of the payables. What we need to do here is add or subtract the change in the asset or liability account balance, and we're going to use the balance sheet equation to determine whether we should add or subtract. For example, accounts receivable is a non-cash asset. If accounts receivable went up, we would need to subtract it on the cash flow statement to stay in balance. Inventory is a non-cash asset. If it went down, we would need to add it on the cash flow statement to stay in balance. On the other side of the equation, Accounts payable is a liability. If accounts payable went up, we would need to add it on the cash flow statement, stay in balance. And if something like interest payable or wages payable went down, we'd have a liability going down, and we would have to subtract it on the cash flow statement.
What? What?
What? Really? That example didn't make it crystal clear on how to do the indirect method? Okay, we'll do an example, or maybe 2 or maybe 4 or 5. Let's look at some examples of how to put together an indirect method cash flow statement and how it gives you the same answer as the direct method. We're going to do this for various types of income statements with adding a little bit more complexity each example. In the simplest case, we have a company that had $100 of sales, which are all in cash. Their cost of goods sold were $60, again, all in cash. So they bought $60 of inventory with cash and sold it all during the period. And so they end up with net income of $40. Under the direct method, we would have cash collections from customers of $100,
Okay, this one makes
cash
perfect
payments to suppliers
sense.
of $60, gives us an operating cash flow of $40. And in this case, the operating cash flow is exactly the same as net income because everything the company did was in cash. If we go to the indirect method, under the algorithm, we always start with net income. Then we adjust for any non-cash expenses or anything related to investing activities, which we don't have in this case. Then we adjust for changes in working capital. But again, we don't have any in this case because we didn't create accounts receivable. All of our sales were cash. We didn't end or begin the year with inventory. And so there's no adjustments. And we end up with an indirect method that gives us a cash flow of 40, which is the same answer as the direct method. Now let's make this a little more complicated and bring in depreciation expense. So we start with cash sales and cash COGS like in the prior example. But now the company has a $10 non-cash expense depreciation, which gives the company a net income of 30. Under the direct method, we have cash collections from customers, cash payments to suppliers. Of course, there's no cash flow involved in the depreciation. So we end up with the same operating cash flow of 40. Now we need to make sure we get the same answer under
This
the
one
indirect
using
method.
net income and
So for the
then
indirect
minus
method, we
10
start with
and
net
it
income,
gets
which
40.
is 30 now.
Jesus.
Add back the depreciation expense of 10. It's a non-cash expense, so to remove it from net income, we add it back. There are no changes in working capital because, again, we didn't begin or end the year with receivables or inventory. So there's no other adjustments, and we end up with operating cash flow of 40 under the indirect method, which, of course, is the same answer under the direct method, which always has to be the case.
So, let me get this straight. If a company had, say, $10 more in depreciation expense, it would increase cash flow by $10? If a company had cash flow problems, all it would have to do is take more depreciation. That's cool.
Ah, yes, the depreciation cash machine. Just crank up the depreciation expense and watch that cash flow through the door. Well, obviously, it can't work like that. And in fact, I've heard stories about employers asking students this very question to see if they know anything about accounting. So let me jump back out to the slide to show you how this works. Okay, let's say we have another $10 of depreciation. That means we would have $20 depreciation expense total, and we would add back 20. But our net income would be lower because more expense means less net income. Now I'm going to ignore taxes for now and just assume that our net income would drop from 30 down to 20 with the extra $10 of depreciation expense. So we have 20 plus 20 equals 40 instead of 30 plus 10 equals 40. It gets us to the same place. It has to get us to the same place because depreciation is a non-cash expense. It can't create more cash flow. Now, one thing I should note is that you can use different depreciation for tax purposes than you see here in the financial statements. And changes in depreciation for tax purposes actually can save on taxes and can affect cash flow. But that's a topic that we're going to deal with much later in the course. In the next example, we're going to still have $100 of sales, but this time, let's assume that only $80 is received in cash. The other $20 of sales are made on account so that we end the period with accounts receivable. We still have $60 of COGS, which is all in cash, and our $10 of depreciation. Gives us to the same net income as we saw in the last example of 30. When we look at the direct method operating section cash flow statement, we collected $80 of cash from customers. We paid $60 to our suppliers, which gives us an operating cash.
Am I studying for final? No, actually. I'm just studying for knowledge. I actually graduated so many years ago, so also not from this major. So no pressure. Learning without pressure is the best.
Flow of 20. So we have less cash flow here because we collected less cash from our customers. Now let's see if we can get the same answer under the indirect method. We start with net income, and then as we saw in the prior example, add back depreciation expense because it's a non-cash expense. But now we have a change in accounts receivable that we have to adjust for under that third step in the algorithm. What happened is accounts receivable started the period at 0, ended the period at 20, so that's a $20.
Net income's 30 over here. Depreciation expense 10. Oh, that's account receivable. So
Increase in a non-cash asset,
you haven't
which means that we have
received
to
it, so you
subtract it on
subtract.
the cash flow statement. And if we look, that makes it work because we've got 30 of net income plus 10 of depreciation expense is 40,
This
minus
non-cash
20 for the increase in accounts
assets.
receivable gets us to an operating cash flow of
Just
20,
doing
which is the
cash
same answer
flow.
that we got under the direct method.
Run that by me again. We sell $20 of goods, and yet that reduces our cash flow. Isn't that like cutting off the nose to spite the face?
Actually, I think throwing the baby out with the bathwater would be a better analogy here. But anyway, let's think through the intuition behind the...
Do I invest in Netflix stocks? Nope. Like out of FANG, I only had stock in Facebook and Google and Apple. And now I don't have any Facebook, aka Meta stock, even though I worked for them before. I only have Apple and Google now.
Indirect method. We want to start with net income, make adjustments to get to cash from operations. Net income includes $100 of sales. All of those sales are legitimate. They meet the revenue recognition criteria. But $20 of those sales were never collected in cash. What we need to do is start with net income, which includes the $100 of sales, and remove the non-cash sales. Fortunately, the increase in accounts receivable keeps track of the non-cash sales, because anytime we make a sale as credit, we have to increase accounts receivable. So if we start with net income, which includes $100 of sales, subtract the increase in accounts receivable to take out the $20 of non-cash sales, we're left with $80 of cash sales and cash from operations, making the nose, the face, the baby, and the bathwater all safe in this case.
Excuse me. Oh, choke on water. What app do I use for investment? Use E-Trade and Webull. E-Trade for trading. I use the Power E-Trade, not the simple E-Trade. And I use the, what's that called? Webull, just for the information, the news and stuff. Yeah, 20 touch. I used to be a Twitch affiliate, and there's a hydrate command, but then I quit. So we don't have the command anymore. Pongo Puffer. Have fun with finals, man. Mate. Because, you know, as long as you put in the work, the grade will reflect what it is eventually. There's also really not a need to, like, go extra hard to study in the finals week. Just, like, look at a normal pace and remember what you did and sort out the knowledge map per se, and you would do very well, very, very well.
One more example. We're going to start with sales of 100 again, with $80 in cash, $20 on account, just like before. Now we're going to make the inventory part a lot more complicated. So we'll keep $60 of cost of goods sold, but in this case, we actually bought $75 of inventory. So we bought $15 more of inventory than we sold, and we only paid $50 in cash, which means that $25 of that inventory was acquired on account, so we have accounts payable of $25. Then we subtract off the depreciation, and we end up with a net income of $30. Under the direct method, we collect $80 of cash from customers. We only paid $50 cash to our suppliers, so we don't use the COGS amount or how much inventory we bought. We use the actual cash we paid, which was $50, and we end up with an operating cash flow under the direct method of $30. Under the indirect method, we start with net income. We add back depreciation expense, so we've seen those two steps before. We've also seen the subtraction of the increase in accounts receivable to take into account that not all of the sales were made in cash. Now we have to account for that mess with inventory. So what happened was our inventory started the year at 0 and ended the year at 15. It went up by 15 because we purchased 75 of inventory but only sold 60. If a non-cash asset goes up, we subtract it on the cash flow statement, so we subtract the increase in inventory. For accounts payable, they started the year at 0, ended the year at 25, so this liability accounts payable goes up by 25. That's on the other side of the equal sign, so cash has to go up by 25 to make this balance. So we can see on the indirect method cash flow statement, we have increase in accounts payable of 25 gets added back. When we add everything up, we get the same operating cash flows under the direct method. So quick word on the intuition here for inventory and accounts payable. If your inventory goes up during the year, it means that you're buying more inventory than you needed for your level of sales, which means you're...
I'll take this one too. Wish as motivated as you are. Actually, it's about relieving pressure. It's about pressure. It's like, I don't know, one of my strategies is to put a lot of pressure on myself. It kind of pushed me forward. It's not like I enjoy this stuff. I mean, I did enjoy the major I learned, but I don't think I necessarily enjoy this stuff. I just find it necessary. Yeah. As a matter of fact, I think streaming every day actually helps because it forces me to show up. Well, I don't stream every day because I have a personal life, but having the streaming habits does push me a little bit. Let's sort this one out. Net income's 30. Depreciation expense is 10. Then increase in account receivable. That's 20 because I haven't got the cash yet. So subtract that because it's non-cash assets. Increase in inventory. $75 of inventory minus 0. So we subtract 15 here. Increase 15 inventory. And then pay 50. 50 was already paid in cash rest. The 50. 25 accounts payable because that's non-cash out. That's actually, I think that's a liability. Because you have to pay the supplier, so it's not assets. So that's 25 right here. Because it's on the other side of the equation.
Spending extra cash on inventory, which is why it's a subtraction on the cash flow statement. For accounts payable, if your accounts payable went up, that means that you got stuff without paying your supplier. Not paying your supplier is a source of cash. That's an side of the equal sign, so cash has to go up by 25 to make this balance.
Does the knowledge of financial accounting really help in predicting the future of a company's stock? I want to say it predicts future, but I think it's important to understand that, let's say, for example, the cash flow is healthier, or what they spend their expense on. Because, for example, companies like Microsoft, they used to go through a lot of lawsuits, so they purposely make their earning reports a bit worse by doing this kind of tricks. So if you know how to read this stuff, you know they're hiding a lot of good stuff. And whereas I would bet you 99% of the stock investors would not read this. So, you know, even though Microsoft might be hammered by the market, it's still a very solid business. So I guess it helps you evaluate whether a business is healthy, but doesn't help you predict stock prices.
So we can see on the indirect.
In that sense, it does have a little bit of prediction, because in general, the healthier businesses, the higher the stock price it will be eventually. Yeah, it's like I think this is one of the methods Warren Buffett used to do. So he calculated all the assets and stuff of every company and then compare it to its market value. And if the company already has more assets than the market cap, then it's automatically a win. So he buys that stuff back then. It's like trying to seek high likelihood of winning rather than a blowout. So yeah, that's why I read this stuff.
Indirect method cash flow statement, we have increase in accounts payable of 25 gets added back. When we add everything up, we get the same operating cash flows under the direct method. So quick word on the intuition here for inventory and accounts payable. If your inventory goes up during the year, it means that you're buying more inventory than you needed for your level of sales, which means you're spending extra cash on inventory, which is why it's a subtraction on the cash flow statement. For accounts payable, if your accounts payable went up, that means that you got stuff without paying your supplier. Not paying your supplier is a source of cash. That's an extra $25 of cash that you would not have had if you had paid off your supplier's amount. And so we add that to recognize that it's a source of cash.
340,
We're going to go through a lot more
60,
examples of like this in remaining videos
20,
to help you get down this intuition.
5 plus 95 is 30.
Okay, this is quite complicated. Do you have some simple formula or algorithm we could use?
Well, I showed you a slide earlier in the video with a simple algorithm for doing the indirect method, and you all went, what? What? Really? Sorry to be a little peevish there. I guess that's what the cash flow statement will do to us. I understand that it is hard to get your head around how this indirect method works when you see it for the first time. So what we're going to do in the next video is go back to the relic spotter case and step by step work through how to put together an indirect method cash flow statement for relic spotter. And then you see many more examples later in the week, and hopefully as you get the mechanics down, we'll be able to talk more about the intuition for what this indirect method statement is telling us, which is the real thing that we want to get out of this effort of learning how to put together the indirect method cash flow statement. Anyway, I'll see you next video.
See you next video.
I was thinking 13F a little bit. Finally, about public trading. This is about financial performance. Yes, this one's more about like. Oh, this one's about hedge funds, I think. It's about the whales. This one's about company health. Can you explain what you mean by market cap? Yeah, definitely. Definitely. Let me make, for example, let's pick Apple stock. So, basically, I kind of think of it as a pie. Is there a paint program here? Paint. Paint. There. Don't need that. So let's, for example, I have this whole circle represents my company, and then because I need money to do things, so I raise money from the people, from everyday people. And let's say I split my company into six pieces, and then I hold one of this, me. And because I don't have cash, but I want to buy things, so I say, hey guys, I got a company. I got 5 pieces of my company to sell. Let me say it's $100. I will give you one slice of my company. But since my company is like making, let's say, $1 billion per year, I just haven't made it. And people think, oh, $100 for like 1/6 of a company that's making $1 billion per dollar. That's such a good deal. So a lot of people want to buy it. So when there's a lot of people competing for something, it's kind of like auction. Like competing for this, it's like 100. The other was like, no, I'll buy it for 200. The other's like, I'll buy it for 300. So the stock price keep going up. So that's about like, and then eventually, let's say it reaches $10,000 per share. $10,000 per share. So that's how how was that called? How the stock price changes, I guess. And since in the equilibrium case, there's a consensus among the market that a share of our ABC company is worth 10,000. So that implies every share would be worth 10,000. So even though I never sold my share is still worth 10,000. So you do the share price, which is 10K, and then I have 6 slices. So I have 6 slices. So the market cap is like, if in the market, they think my whole pizza is worth 60K. So that's market cap, and which is like here, for example. Yeah. I don't know how to see how many shares are outstanding. Hope that makes sense. So basically, let's say there are the X numbers of Apple shares out there. So 154.51, which is the stock price, times X would equal to 2.5 trillion. So we can back calculate what X is. That's a stock market cap. Does that help? Cool. Let's look at the official market capitalization refers to total value of all company shares of stocks. Yep. It's calculated by multiplying the price of a stock by its total number of outstanding shares. For example, a company with 20 million shares selling at least $50 per share would have market cap 1 billion. Yep. I guess I make a slight mistake. I should only multiply by 5 because those shares are not outstanding. My one share is not outstanding, but that's pretty minor. Cool. It's time for me to get off because I still gotta go to work tomorrow. Have fun with whatever you do, finals or fighting smells or whatever it may be. Take care. See you next time.